Hey everybody, I'm Mark Dannenberg. Welcome to the Options Moneymaker and New Cycle Trading and Analytics Q&A for Wednesday, February 9th, 2022. We're here to help answer any questions you might have. Many of you are deeply immersed in learning and understanding the Aurora trading system. Some of you are immersed in learning how to trade options. Some of you are immersed in learning how to trade futures. We trade the NASDAQ 100 futures on a daily basis in our live trading room. We also discuss crude oil and we discuss options all around the Aurora trading system. We carve out time, myself and my team, every other Wednesday to spend time with you answering questions you might have so you are able to move forward with your learning. And we just want you to learn to be successful and achieve whatever goals you may have. Okay, so I want to talk about a couple things first before we get to questions. Please feel free to pop questions in the chat and we will get to each of those. We've spent now since January 3rd in the live trading room talking about the Aurora trading system, trading the Aurora trading system. We are trading it starting at 7 o'clock in the morning. We track the trades until 2 p.m. Eastern time, and we open the live trading room at 8 a.m. so that you can follow along with the trades. You can ask questions about the trades. You hear Kristen queuing up the trades, telling you what might be coming to give you a little bit advance notice. And if there's any confusion or misunderstanding about the definition of that trade or why it was a trade or why it wasn't a trade, we are there to answer those questions. But I realize that there's a need to provide very, very clear definition of system versus parameters. So when we talk about system performance, we're talking about the detail of every trade that we place, and we talk about the detail of the profit or loss that we record. We're really referring to the Aurora system itself. The Aurora system gives us signals to go long, gives us signals to go short. If we're trading options, we can buy calls, we can buy puts. If we're trading futures, we go long, we go short. That's the system. The system is the signals. The parameters are not really the system. The parameters are what we defined as the most beneficial way to trade the system. How to take the system signals and turn it into a profit more often than a loss. How to trade those system signals, and when it is a loss, know that it's a reasonably acceptable loss, because we are going to have losses, that we are defining a profit target that's based on historical analysis, and that some parts of the parameters are hard-coded rules. The rules are mostly about how to get into a trade, when to get out of a trade, but then the parameters also include guidance. So for example, when we're in a catch trade, our profit target is 10 points. We have seen through our history that more often than not, our catch trades that are presented to us by the system are going to get to 10 points of profit. But we've also seen enough situations where it gets to 9.5 points or 9 points, or worst case, 9 3/4 points and never hits that 10, and then comes back and gives us a loss. So we've provided guidance, and that when we say guidance, we mean these are strong advisory suggestions based on our experience that perhaps when the profit on a catch trade gets to 9 points or better, you might want to lock in 5 points, because it's not a good feeling, and some of you have experienced it and we've experienced it, which is why we created this guidance. It's not a good feeling to get to 9.5 points of profit and then have it reverse and come all the way back and take you out for a 20-point loss. So we've provided guidance. That guidance is discretionary on your part. You might decide wherever you are in terms of your accumulation of profits for the day, I'm going to hold for 10. I see the signals, I see where we're going, I see confidently that we'll probably get to 10, I'm just going to hold for that. That's fine. It's all at trader discretion. When we're in the category of guidance, we're going to tell you what we believe the appropriate guidance is, and we're not trying to influence the way you want to trade. We're just providing guidance. So that's an example of guidance. But there is a system. That's the Aurora signals. That's the blue and red bars. That's the PBA. That's the CXA. It's a combination of the 3, 5, and 10-minute charts. The parameters are what we spent 18 months really refining, along with tweaking the signals. But the parameters are, we did a lot of testing about tracking an entire cycle, meaning if we let this signal run until we got a reverse signal, what was the maximum profit during that period of time? What was the maximum drawdown during that period of time? And what was ultimately the outcome, profit or loss of that cycle? And then we analyzed all that data and we arrived at the parameters that we have issued to each of you in the training. Those are the defined stops, the profit targets, and then the more we get involved with you in the live trading room, the more you will learn the guidance that we also suggest. So there's a learning curve to go through, and I think it's very important for you to understand the difference, the system, the parameters, and within the parameters, there are hard-coded rules, and then there's guidance. I want to reinforce also, some of you have been getting more involved in trading fractals. Fractals are an excellent way to take additional profits, potentially additional profits, particularly during high periods of volatility. Now, most every single day, we have at least one period of volatility, which is the regular market session open around 9:30. So I've been talking a lot in our live trading room about, in addition to the Aurora system signals, learn how they work, but consider adding fractals to the equation for your trading. Setting a simple fractal for a $10 10-point profit is very simple to do, and then you don't have to manage it. You don't have to do anything else. Fractals, when set properly on your dome, don't really require any other management. It's either going to hit your 10 points or it's going to hit your stop. And fractals, when we're trading them during higher periods of volatility, can be a very lucrative way for you to add profits to whatever your day is delivering to you. If you're having an unfavorable day from the Aurora system, fractals can help to offset some of that. Now, all the fractals don't end up profitable. So, there's a risk when you're trading fractals. But when you're trading them during periods of volatility in particular, you don't know which direction the market is going to move, strongly up or strongly down around news and around market open. I like having both the upper and lower fractal on my dome and let the market just figure out which one it wants to hit. But 10 points during those periods of volatility is pretty reasonable profit target. And they don't require any other management if you're willing to just let it hit your 10 points or go to your stop of 20 points. If you have your dome set up properly, it's on autopilot once you are in that trade. And then the third thing I really wanted to emphasize, I've touched on it quite a bit, especially lately in the live trading room, is the need for some level of diversification in your trading. Now, you guys are active traders in the live trading room. We're trading 3-minute, 5-minute, 10-minute charts. There's a lot going on, but there are periods that are somewhat slow, where maybe we have another 5 minutes before another trade. That's actually enough time to implement some level of diversity. So today I was trying to point you to that concept as I was pulling up the crude oil chart. And I wasn't actively trading the crude oil chart, and I wasn't encouraging you to actively trade the crude oil chart. What I was doing simply was saying, here's a upper fractal on crude oil, here's a lower fractal on crude oil. I put both of those fractals on my dome. I have my dome sitting off to the side on a separate screen. And if the price hits that fractal price level, it's going to automatically put me into the trade, and there's no other work necessary for me to do on that fractal. Once I put the fractal and the price target out there, I don't have to do anything else. So today was a great example. Several of you followed along with me. We are actively trading NQ. We're kind of struggling, muddling our way through the day. It wasn't a friendly day in general. And so off to the side over here, I go put upper, lower fractal on my DOM. And I think from the time I started talking about that in the room, there were 3 fractals that ended up providing $200 each. So $600 is the equivalent of 30 points of profit on NQ. And in the few minutes between NQ signals, there's enough time to look at a crude oil chart. CL is the symbol, CL chart. Where's my fractal? Go to my DOM, put it in, and put in the upper fractal, put in the lower fractal, and then that's it. Just have your DOM sitting off to the side, either in the background or on a second or third monitor you might have. So I think there might be a perception that it feels overwhelming to try to monitor 2 different futures markets, and I'm not at all suggesting that you do that. Putting those fractals on the CL DOM was simple. It was a 30-second exercise, and then they provided about $600 of gain today. And the other way to diversify, because all of this is oriented around kind of the same core signals and philosophy of Aurora, but options. Options can be a great way to diversify. I know that there were 3 today as I was going through it earlier in the day, 3 that did not trigger all at the same time. That would be a little overwhelming to try to grab 3 at the same time. But they didn't trigger all at the same time. And because they're triggering off a 30-minute with 5-minute alignment charts, they're pretty easy to keep track of. You could put a 30-minute wake-up clock out there for 5 minutes before the next 30-minute bar. It sends you an alert and says, hey, you can pop over and look at your stocks that you want to watch and see if there's a signal. So those 3, and let's just say you only took 1 of the 3 that I had noticed prior to 11 o'clock today. If you took 1, all 3 of them, by the way, hit $500 of profit. That's $5 of profit on 1 contract, and 1 options contract equates to 100 shares of stock. So if you just took 1 of them today and added another $500, it's easy to set up the options trade. You might miss a futures trade, maybe, but you can set up the options trade in between your futures trades also. So you have to decide where you want to focus your attention. But if you take just 1 of the 3 today, there's another $500. So in terms of diversification, using today as an example, with limited involvement of time in the options and the options signals and the crude oil fractals, you add, and this is just with 1 option, you add another $1,100 of potential profit with very minimal work involved, and now you're back to your active trading of NQ. So on a day like today in particular, where NQ was not friendly to us, we actually hit our maximum drawdown on NQ. That would have offset about $1,100 of our drawdown, and that has a very significant shift to the outcome for the day. Many of you are not ready to diversify. You're not ready. I want you to stay focused on learning, getting really, really good, strong on your skill development. But this will come in time, but I want to plant the seed, and I'm going to be talking more about it in the live trading room. You can ignore me if you're not ready for it, but I want you to be open to the idea. Just real quick, overall system performance. We're averaging about just over $2,600 a day. This is in all of our tracking back from October 1st, when we had formalized our rule set for the system, our parameters, and our guidance. And that's from October 1st. 7 to 2 is averaging about $2,600 a day. 8 to 2 is averaging about almost $2,300 a day. And personal trading plan, most of you are familiar with personal trading plan. We started with a $5,000 balance and we're up $36,000 in the first 6 weeks. Now that doesn't correlate directly to system performance because we introduced in training PATS, which is the concept of having a stopping point during the day. And there are many days where we stop at our PATS value and the rest of the day up until 2 o'clock has a mixture of wins and losses, but maybe erring more on the side of losses. So although the system ends up positive for the day, PATS took us out with a favorable win over the system. And then there are other days where PATS takes us out and then the rest of the day is just like printing money and the system outperforms PATS. Either way, I'm a huge believer of PATS. Those of you who have been through the formal training know exactly what I'm talking about. But so there's not always a direct correlation between system performance 7 to 2 and personal trading plan. Personal trading plan some days is better than the system and some days is weaker than the system. But either way, 6 weeks up $36,000. So I want to just say one last thing, one more slide here before we get to Q&A. There are really 4 stages of learning. And depending on how long you've been working with Aurora or how long you've been in the live trading room or how much time you have to devote to your trading, you're going to be in one of these stages. When you first start trading, maybe you first start trading options or you first start trading futures and you're first introduced to Aurora, you're in a stage that is referred to as being unconscious incompetence. You don't really know what you don't know. If somebody said something to you, it might go right over your head because you don't really know what they're talking about. So you don't even know what you don't know. And as you start going through training, as you start working with the Aurora system, even simple things like setting up your alerts or listening to the training videos or listening to Kristen describe and explain and call out signals, you start to gain what's called conscious incompetence. You now realize how much you don't know about this, but you start to be aware of what you don't know. And it is the first level of becoming aware. It's your first real concrete, solid level of learning. Many of you are at this level right now. And it can be frustrating because it feels like I don't really know everything that I should know. Then you know what? You are exactly where you're supposed to be. The third level, or the third stage of learning is referred to as conscious competence. You now understand what you are supposed to do. You're mentally focused each day, looking forward to each trade, and you may even talk yourself through the right actions. You might find yourself talking to yourself. Okay, I've got a signal coming up. I'm looking for 5-minute alignment on the CXA, 5 minutes there. I'm looking for the 3-minute. This is all for the purpose of building muscle memory. This stage of learning can be exhausting and it can be frustrating because the minute you make a misstep, and you will, the minute you take a trade and then realize, no, that wasn't valid, you are frustrated because you thought you understood. And then the reality is you actually did understand. It's just that you are not yet fully built out in terms of your muscle memory to just naturally take the action and naturally dismiss actions that you shouldn't take. But conscious competence is a place where you are now aware and you are working through and focused on each single trade, trying to do your absolute best. And the ultimate stage is unconscious competence. It's second nature to you. It's natural. The process flows easily. You don't really have to think so hard about it. You see the signals coming up, and you also have a sense of a less anxiety, maybe no anxiety. You're relaxed because you have enough experience now with the system. You have experience with the parameters. You have experience with the rules. You have experience with the guidance. And now you are feeling confident in making the right choices for yourself. So I'm going to ask Kristen if she wants to add anything to this, because this right here is the type of thing that she's taught for 20 plus years.
Hey, Mark, good evening.
Hi, Kristen.
So this is a fantastic slide. And the one thing that I wanted to add to this is these stages are not a one-way ladder up. You go up and down, back and forth through these stages as you are learning. So we have 3 different distinct entries. You might be at a place where you are unconsciously competent at a PB3 entry, but yet you might be consciously incompetent for the PB35 exit strategy specifically. So you're not going to just go through these stages one at a time and then be at the top and be done. You will find yourself going back and forth in these stages as you go through the learning, and that can be frustrating because you think, wait, yesterday I had this. What was wrong with me today? It just means there was something new that was introduced. It just means there was something added to what you need to learn or what you can learn. And so don't be frustrated as you find yourself going back and forth in these stages. Be aware and accept and know that you will eventually get to the unconscious competence stage in each segment of the learning.
That's a really great clarification too, Kristen, because you're right. You can move back and forth between these stages depending on what part of the entire scheme of the system that you are learning. So that's good clarification. I just wanted to share this, folks, because I just want to put it out there and say, if you're feeling frustrated, it's a natural part of the learning process. If you're scratching your head thinking, I don't have any idea what I'm doing, that's great. You're at the starting point, you're at the right place. We are going to help you as much as we possibly can in the live trading room. So just stay with us and we'll do our best to help you. All right, so let's jump into Q&A, and I'm going to start with Greg. Greg said, can you show a chart of today's trades? I feel like 12 to 2 was pretty good. 12 to 2. I'll show you. First of all, we're going to pull up a chart, and we're going to show our tracking. We're blessed to have Kristen to stick around, and no matter what's going on, she's always tracking till 2. I'll show you. Let's do it this way. We're going to go 12 to 2 today, Greg. My perception is it wasn't good, but we'll see. 12 to 2 was up just over 10 points, 11 points. So it wasn't super bad, wasn't really anything to write home about. And you can see that that period of time, the maximum profit was $230. The maximum drawdown during that period of time was $435. Today happened to be one of our days where we hit a maximum drawdown, maximum loss. We have a limit to where we are willing to go in terms of losses. Now, I'll just add, you didn't ask about this, Greg, but I will just say that in the time frame that was after, I think it was after 3 o'clock. Let me look at it on a 5-minute chart. Yeah. It was actually after 2 o'clock today, actually approaching 3. It was a nice move down. It was a really nice impulsive move up. And then there was a nice, pretty steady state move up. I was trading starting at about 2:30 today until 3:30. And that 1 hour gave me some nice activity, nice profits. All right, Greg is also asking, can you describe the difference on an options chain between volume and open interest? Volume is the number of contracts that have traded that day, that particular day. If you look at your options chain first thing in the morning, volume is 0 on, should be 0 on every strike. That's the number of contracts traded that day. Open interest is the number of total contracts that are currently open. So some of those might have opened and closed today. Most of them have been carried into today. And when you're trading options, for me, I don't really care that much about volume. I care about open interest. Is there enough open interest or enough active contracts out there to support the trade that I want to place? So I'll give you an exaggerated example, Greg. Let's just say you're looking at a particular expiration and strike on an options chain, and it is your desire to trade 50 contracts. And you see that there's 5 contracts of open interest on that particular strike. I would not do that. I never want to own the market on any particular strike. It's just my personal bias. I don't want the number of contracts that I'm trading to be greater than the amount of open interest. In fact, I want plenty of open interest to cover my trade. If I'm usually trading 1 to 3 to 5 contracts, I want more than 100 contracts of open interest. And so what I'll do is, if I still want to take the trade, I'll look for adjacent strikes. I'll go up a couple of strikes, I'll go down a couple of strikes, and I'll see if there's a strike that has a more satisfactory level of open interest. So I hope that answers your question, Greg.
Mark, if you want to kind of stick with options, Chris is asking, could you please go over the, I'll say rule, he asks rules for Aurora option trades, particularly when to exit short of hitting profit target. Thanks. So do you want to maybe talk a little bit about that?
Yeah. Okay, so I'm going to give you an example here. I'll try to find one that that would work for us. Let's see here, 1420. Wait, give me just a moment here. I think Booking had a nice trade today. Actually, it did. So here is a situation where Booking had a trade that you entered into. Actually, I'm going to go back 1 block here. So Booking had a trade that you entered into at 10:35. Because at 10:35, you have alignment between the 5-minute and the 15-minute. So I'm looking for, I'm sorry, I said 15-minute. I meant 30-minute. We're using a 30-minute chart aligned with a 5-minute chart for our options trades. And we're only using PBA, we're not using CXA. So what I'm looking for is alignment between a 30-minute PBA signal and a 5-minute. So at 10:35, I have that alignment. Now, there's a couple different ways that you can exit this trade short of hitting your profit target. One is you just hold the trade until the 30-minute bar opens stopped, and then you just take the trade off. So in this case, where was my 1035 right here? You're long at 1035, you're long at 24.95, I'll round up to 96. That's the value of the stock when you open the trade. And when you close the trade on a stopped signal on the 30-minute, it's at 25.30. So you went from 24.96 to 25.30. There's 34 points of movement. If you're trading a 50 delta, half of that movement will translate into profit. But there's another way to exit also, because you see these gaps in the 5-minute. They could be suggesting that we're getting close to maybe stalling on the upward movement. So although we haven't taught this yet, I'm going to give you the guidelines here. You can, when you have a break, you have a bar that opens stopped on the 5-minute, I could actually use the prior 5-minute bar as a stop. Now it's a little more complicated to put a stop in on an options trade, but you'll have to learn that, and you can use the prior bar as a place, the prior bar low as a place to put a stop, and then you just continue holding the trade as the 5-minute re-engages, and maybe you hit your profit target. And if not, then when the 5-minute prints a stop signal again, the 30-minute is still telling you to hold, but I'm going to move my stop up to the low of the prior 5-minute bar. So you would be out somewhere around 25.09. You were in at 24.95. So about 14 points of profit, and at a 50 delta, easy $5 of profit. $5 of profit target is generally what we're going to start with as we get more actively engaged in trading options. I'm going to jump down to Barquette's comment, and I want to, because it's tied to options. He's just saying monthly options would be better open interest than weeklies. Yes, when Barquette, if you're not familiar with options, when Barquette is saying monthly options, those are the options that expire on the 3rd Friday of each month, the 3rd calendar Friday of each month. Those are monthly options. And then there are weekly options. For example, Amazon has an option that expires every Friday. S&P 500 has an option that expires every Monday, every Wednesday, and every Friday. So there's different expirations that are available. Barquette's comment is accurate that the monthly expiration options, which are 3rd Friday of the month, will generally have more open interest than the weeklies. That's true. They also are much more expensive if you're 3 weeks or even 4 weeks out to that option. So one of the advantages of trading the weekly options, or even trading 2 days out on the S&P 500, is you have a lower commitment of capital on those trades, but you might have lower open interest that makes you uncomfortable taking that trade. So part of the process of trading options, it's more complicated. It's not complicated, I'm sorry. It's more involved than just simply clicking and buying or selling a futures contract. Part of the process is doing a little bit of research in advance and looking where your heavier strikes are, where the more heavily weighted open interest is on those strikes. And then be prepared for any trade that might come up by already knowing kind of in advance what strikes you would use if a trade came up on S&P 500, or if a trade came up on Amazon, or anything else in the watch list. Tony L is asking, what times of day would you recommend looking at stocks? Between 9:30 and 4 But practically speaking, because when we launch the new options alert service, we most likely will not be taking any new trades after 2. It is our intention, at least initially, not to hold any trades overnight. There's a huge amount of risk to holding overnight if you don't really understand what you're doing or how to recognize when to hold overnight versus not. There's also a huge amount of opportunity. We had a gentleman in our live trading room last week, held a trade overnight. He held 14 contracts and took $128,000 of profit. So there's huge opportunity, but the risk can be these gaps that present themselves from the close, the last bar of one day to the next bar of the next day. So just for example, if you thought that the stock was going to go down, in this case, the S&P 500, and you bought a put and it jumps higher the next day, you can have a fairly sizable loss. If you thought that it was going to go up and it jumps the next day, you can have a pretty sizable gain. So there's some real opportunities in holding overnight, but it's a little bit more involved, I think, than looking at the current PBA signal alignment. So initially, when we launched the options alert service, our intention is we're looking for $5 of profit on any stock or index that we have experience with that we know should easily get to $5 of profit. It'll be less, maybe $2 or $3 on those that we don't have a lot of confident experience that'll get to 5. We're going to look at doing day trades, and we don't intend to do a large number of trades every day. We're really just looking for somewhere between 0 to 3 trades a day. There will be some days we won't have any, and there will be other days where we'll have more than one, probably not more than 3.
Mark, Montana Mike has a fractal scenario. A question about managing this situation. So the fractal is hit, triggering the trade, but the price retracement occurs before the profit target is hit, and then the price trend reverses sharply. Any thoughts on how to manage that situation?
Your stop is by default going to be 20 points away if you're following the parameters we use. So if the price is reversed sharply, then you might just get stopped out before you have an opportunity to make any kind of an adjustment. That's more often going to be the case. But because of your knowledge of Aurora, say, for example, you were long in a fractal. Did that break? 46 didn't break. But if you were, say, long in a fractal and all of a sudden there's a short PBA or a short PB35 that comes on, I would reverse the trade. If it has not hit your stop, I would let the catch signal or the trend signal within Aurora take precedence. So if you're short on a fractal, it hit your lower fractal, and all of a sudden you have a long catch trade or long trend trade being presented, I would reverse the trade.
Mark, David is asking, previously when you had traded options, you tracked several stocks and indices and kept a spreadsheet with the sweet spot for each. Do you know, are you planning on doing the same or something like this with Aurora?
We are, David, and Aaron has been prepping that in anticipation of the new alert service. because that gives us an idea by stock or index or ETF what a reasonable sweet spot is. So our definition of a sweet spot is how much we would expect the stock to move on a regular basis. And we're able to calculate it based on if we want an 80% win rate, a 50% win rate, 90% win rate. This tool that Aaron created will calculate for us then what the sweet spot is. So let's just say for very, very simple math that we saw that the sweet spot was 15 points, meaning that the underlying stock consistently or 80% of the time will move 15 points off of this signal. That means that if we're going to trade a 50 delta option, we would have a reasonable expectation of getting a $7.50 profit, 50 delta. Now with options, we're not going to run it quite so tight like that. If we see that it is reasonable that using a 50 delta option or even a 40 delta option, that we should reasonably be able to expect better than $5 profit, we're going to target $5. So if you told me that 50 delta would get us $7.50, I'm probably going to set my profit target for the alert that we send out to you at $5. There's going to be a little slippage between us sending the alert and you receiving it and entering the trade. Sometimes that slippage is going to be favorable and sometimes it's going to be unfavorable. And if we can exit for $5 and maybe you got in for 50 cents more, so that's unfavorable slippage, but we know that it's reasonable to expect it to move beyond 5, then you would likely get $5 also. But that whole tool is vital to this process. And then separately, we have a spreadsheet that we will enter every trade we've actually taken and alerted, and we're going to track the overall performance, and we'll be posting that on our website so that you can track right along and see how the service is performing. Paul's asking, when do we expect to release the alert service? Next week on Wednesday. I'm tentatively planning on having a short webinar just to announce the service, talk a little bit about answer questions, talk about what type of account you might need to have, and then on Thursday and then through the weekend, you'd have an opportunity to consider whether or not you want to sign up for it. And I think it's Monday the 21st would be the first alerts that would be sent out.
Mark, going back to just some of the rules in terms of Aurora and options, Mark is asking if you hit your profit target and get out, do you need to wait for a gap in the 5-minute to get back in, assuming the 30-minute keeps printing?
Yes. Yes, and that's what's really cool about following the Aurora system and using options here is many of the same criteria, guidelines, and rules are going to be exactly the same. So if the 30-minute continues to print, you're going to have an opportunity to re-enter. So here's an example. We're on S&P 500. We would have been long at 1535. You're out based on not out of the trade, but you might have gotten stopped out at moving it to a prior, in fact you would, moving it to a prior bar low, so you're out of the trade. The 1550 gives you another opportunity to get back in simply because it's now realigned with the 30-minute. So much like on trend trades, the 3-minute and 10-minute alignment, we are waiting for the 3-minute to represent itself after a break. Greg, if you remind me about that in the room tomorrow, I'd be happy to take a look at that with you. Greg's just asking if tomorrow we could look at an options chain for booking. Open interest is very tight, very light. Yes. So we're not going to trade particular strikes when we have insufficient open interest. All right, John, you're asking about the moving averages right here. So the moving averages are a tool that was created by a gentleman by the name of Bill Williams. And these three moving averages are a set of moving averages referred to as the alligator. Bill Williams created the alligator, and he created the awesome oscillator. I had an opportunity to train with him and his daughter, and the tools have been, the indicators have been part of what I've looked at for many, many years. The way you put that on your chart is you just simply go to your indicators, and what you're going to be looking for is Williams alligator. Williams alligator. And that will put that set of moving averages on your chart. Greg's just sharing a comment. If you have a TradingView Pro Plus account and you have to rebuild your alerts every 30 days, I found that if you build one new alert, it resets all the alerts to a new 30 days. Okay, that's good information. I personally would suggest any trader to have the premium. It's a few dollars more. You don't have to go through resetting your alerts every month. Let's see what's going on right now. Kristen, is tonight the night you said you were going to track all night?
That would be a no.
Ah, okay. I was
So
just,
my dinner's waiting for me
I
when we're done.
was just wondering. I don't see any other questions out here, folks. So I'm going to give it just another couple, 3 minutes, and then we're going to close out. There is a site that we use called forexfactory.com. Richard, take a look at that. And on the calendar, it lists a lot of stuff from around the world or for the US specific news that could have an influence on the market. Forexfactory.com. For example, I'll give you a heads up. Kristen, get ready for this. Tomorrow morning, Thursday morning at 8:30, they're announcing computer price index month to month and core consumer. I said computer, didn't I? Consumer price.
Is that a new one?
And then the core consumer price index month to month. Those are both indicated as potentially having a more dramatic impact on the market. And when we say the market, it can influence the equity markets. When you take a look at oil, you don't have the same reactive impulse moves that affect NASDAQ. Another reason why I'm really suggesting that when you are ready, that you add some level of diversification. You can trade oil right along on a day where NASDAQ's just beating you up. It feels like it's not easy, and oil can, carve out 1 point, and 1 point is $1,000 on oil. Works exactly the same way. 8:30 this morning, there's a signal. Actually, it was 8:35. That's when I saw it come on. 8:35, you're long at $89. That's where oil was. And if you held it until the stop signal on the 15-minute, it went to 89.76. Now that's 76 ticks, and each tick is $10. So that's a $760 move there in an hour. And this morning during that same hour, on NQ, yeah, we were fumbling around, a little bit profit, a little bit of loss. And it doesn't mean that NQ is not worth trading. It just means it's going to have some challenging days and some very productive days. Oil is something that doesn't mirror the performance of the NASDAQ. So it provides a level of diversification. So Brent is asking, would you recommend starting with a larger account than $5,000 just for safety? For example, having a losing day of 85 points is less percentage on 10,000 versus 5,000. I get nervous risking 25% on a losing day versus 12% example. So the way I would personally think about that, Brent, is if I was you, I'd put 5,000 in my trading account, knowing that I've got another 5,000 sitting off to the side that I'm willing to commit to trading. But I want to stay focused on making it work with 5,000. And if you happened to draw the card that says on your very first day, you had a $1,700 loss, which would be our stopping point, you could always pull in another $1,000 just to give yourself a little bit of wiggle room. But I don't necessarily feel like I have to put in 10,000 to get started. Certainly you can if you prefer to do that, but the majority of the time, unless you really just hit the luck of the draw, the unluck of the draw, and have a couple of losing days, 2 or 3 losing days, your first time live trading, you ought to be able to do it with 5,000.
I also like, Mark, how a lot of people in the room have shared that they started with minis versus micros versus minis in order to maybe start building some of that balance, building some of those profits with less risk.
All right, so the last question for tonight goes to Sad. When will the option signals webinar be held? And can we ask question in order to know how it works, what we should expect when it takes place on live webinar? Right now, I am tentatively planning on having a webinar next week, a week from today. I just need to make sure that we have everything prepped and ready to go for the alert service. And on that webinar, you'll have an opportunity to ask questions about the service. But I'm going to give you a brief overview of the service, what to expect from it, pricing, and then you'll have an opportunity to ask questions. All right. Kristen, thank you for being here tonight. You should go have dinner.
Okay.
And and thank you, all of you, for being here. Appreciate your being part of our community of traders. Appreciate your support. We would like to do anything we possibly can to help you reach your personal goals. We will talk to you again tomorrow morning at 8 o'clock.